From the morning reading, buyers have failed to step back from what had been high-risk short-term conditions. A number of sensitive indicators are pointing to a higher probability of short-term weakness in recent days, yet stocks have kept rising. Using a test for forecast accuracy, when you go back to 1929 and look at every other time when stocks shrugged off short-term risk and powered higher, giving false signals, over the past 20 years in particular, it has had a tendency to occur near major lows. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:58 a.m. Central Time, and I am recording this in preparation for the market day of October the 8th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, what happened last night? Well, in our morning report, we see that all four of the broad market U.S. indices are down, but not down by any significant amount. They're all about 1/3% down, or about 6.5 points on the S&P futures. Nothing major. Crude oil's up almost 1%. Euros up about 1/4%. Bonds are up about 1/3%, and gold's down about 1/3%. We had, for the first time in quite a number of days, China's exchange is open, and it's open strong, up almost 3%. Hong Kong's down about 0.7%. Japan's down about 1%, Germany's up marginally, and United Kingdom's up about 1/3% at the time of this cut. On the macroeconomic reports for Thursday, of course, we had the weekly unemployment claims and the natural gas storage. Also note there's a 30-year bond. That could move things if you're a bond trader. And you have FOMC minutes that get released today, and it's kind of hard to you kind of go back and forth on this. Nobody's really expecting anything to move as a result of this particular release of the FOMC minutes because of the way the last month's monthly employment report has been released, kind of trumps it. But still, there'll be people looking at it very carefully to see if there's any nuances that mean when interest rates could rise. You also have another FOMC member speaking today, so keep in mind that. In terms of tomorrow, you have really it's the same FOMC member. Oh, that one's Williams on Thursday, Lockhart on Friday. So we've got a couple FOMC members speaking in the next couple days. That could actually probably provide more color to what's going on. And let's see, and then also FOMC member Evans is speaking as well tomorrow. So actually 3 different opportunities for somebody from the FOMC to speak and provide color commentary, as it were. In terms of the current volatility conditions, look at that short-term VIX, 16.39. This is clearly about the lowest it's been in a long time. At the same time, we have this elevated skew, and we'll talk more about that in a minute, but note that it's 132.39. That's a bit of a warning sign. At the same time, IV percentiles, very low. Most of these are actually approaching the lower quartile, 25 quartile, than they are anything else. You did have a standard deviation move put in yesterday by the Russell. It was actually quite strong yesterday. Other markets were much more tame and kind of just normal price action. Go ahead and bounce over to the charts. In terms of the SPX, we continue to just play right here at the very edge of this resistance zone, have not yet broken through, and we you know, it's an interesting place. I mean, you think about it, if you go back to the bigger picture, you had to break down from the rounded top, short-term reversals, 2 of them, from similar areas. We basically would call this a double bottom. You failed at the 50% retracement of the August decline. We're seeing the initial signs of the first higher high, and a, or actually I should say higher low. If you want to call this marginally a higher low, I really would call this a similar low, but higher low, and then we're trying to make the run for a higher high. Have not yet accomplished that though. So for right now, it's sitting right at its prior high, may still fail to break through conclusively. That's kind of the situation. Now, it's not quite the same situation across the others. In fact, if you look at the Dow's got what I'd call a similar high, but the similar high is off the FOMC peak. So whereas the S&P is essentially playing in this area, the Dow has clearly broken through that line of resistance and is now playing with the second line of resistance that we talked about earlier in the week, and that being this FOMC spike from the day that report was released. So, and it, by a few cents, probed above that, though it did close below that top of that spike. So Dow has been, relatively speaking, stronger. Russell put in a big day yesterday, but has frankly more ground to catch up, and that could be why the others, they're dealing with more resistance while there's still more open air for the Russell. So it's just backfilling and catching up into areas of lighter resistance than is the case with the Dow and the SPX. For the NASDAQ, it seems to have stalled the last 3 days in the same area, and I can't say that, other than that this was a swing high and similar high here, but obviously this was a higher high. It's not obvious here as to why it's stalling at that point. It would seem that it would have an opportunity to really kind of come back at least to this area before stalling or meeting a significant resistance. So some interesting things going on there. Also on the futures, the volatility, VIX futures, we continue to toy right around this 20 area. Now technically it's below 20. But clearly this is an area still of support, so we kind of think of this as when it's above 20 being the land of bear market volatility, as opposed to this 12 to 18, the land of bull market volatility. Well, we're still in bear market volatility land, and we'll look to see if it can actually break and transition into a more outright bull market area. In terms of our special report for today, we continue to have this kind of transition phase where we have some of the indicators who are outright strongly bearish and others that are even outright strongly bullish. And that's what happens when you're in a transition. Remember, you go from trend to either consolidation or transition, and then either trend continuation or trend reversal. We don't know yet whether this is going to be trend continuation or trend reversal. We are in that throw. You have IBD status as confirmed uptrend, so very bullish there. And the accumulation distribution for the S&P actually has turned fairly favorable. It's at a B minus, though the NASDAQ still is at an E, so very poor there. GMI index actually lost a point yesterday, went to 2 out of 6, and that sell signal is still in place, and that author is still in cash. Primary market condition, when you take a look at the key moving averages and how they stack, strong bear. Stock charts, decision point scoreboard. You have on the short term all up arrows, but on the intermediate and long term, still decidedly bearish would be the clear consensus there. And then on the intermediate term market posture, you have a regular bull. So when you put all this together, what's the consensus? Mixed. So what we call that? Transition. And we don't have any clear idea from these signals as to whether we are likely to be in a really bullish trend, or if we're going to be in a bearish trend. We are in transition, and there's signs of hope for both parties. In terms of buy side portfolio exposure, position sizing opinions. The investor position sizing opinion is calling for up to 100%. We would go a little bit more cautious than that. We would suggest scaling into positions as the bull rally continues to gather strength. From an active trader volatility based system, that signal would say up to 75%. In terms of that intermediate term market posture, again a little bit more detail here, it is bullish overall, and you see the S&P has broken out over the 50 line nicely to 58.8. Dow the most bullish at 74.3. It's really coming into that range. If it pops above an 80, we would call that extremely bullish. NASDAQ also very healthy now at a 61.8, and then the Russell has been playing catch up, came from the furthest back, but clearly is playing catch up and is closing in on that 50 area where it would also go to a full out bullish status. Overall hedge warning status, when you put all this together, we are at threshold level 1. There is some elevated risk conditions, and certainly reflective of that point of transition, and yet at the same time you should be putting on some bullish trades, and we've done that very thing this week. We've got a number of covered calls on, some puts on. We're definitely playing in the market and putting positions on, but we're also relatively defensive in our choices, and at the same time keeping that position size in check until we get more clear indication. At the same time, our core portfolio is actually quite defensive in its posture. So if the market were to roll over, the core portfolio would be in very good position. If we continue to move higher and we gain confidence that the bulls actually have something this time, then we would add more alpha by virtue of layering in additional bullish positions. And remember, while this IBD status is confirmed uptrend, this is the 9th time in 2015 we've had this signal, and the prior 8 all failed miserably. So there is great reason to remain overly cautious to some degree. Volatility based metrics, this is fairly benign. In fact, the only thing that's really flagging here is VIX futures up over 18, but it's getting close to that 18 mark, and we may not be able to say that much longer if things continue to ebb and this rally continues to power on. We did have that one warning from the skew. It was up over 130, which means that there's about a 10% probability of a 2 standard deviation move within the next 30 days. So that's clearly somewhat elevated. A sign for the bulls, New York Stock Exchange, new highs, new lows, 559 yesterday against only 34 new lows. Also, in the intermarket risk aversion indicators, we now have 2 of the 5 which are flagged as risk on. And note that they're both associated with relationships and bonds. In terms of the sector signal, that one is still flagged as risk off. So 2 of the 4 that are associated with bonds have flagged as risk on. In terms of our special opinions, VIX is still outside the acceptable window for option income strategy initiation of novice traders, but aggressive traders can leverage these higher premiums and consider reduced position size and potential for higher than normal delta and vega moves. With respect to covered calls, conditions are cautiously bullish, acceptable to initiate new positions for novice traders. Use a 1-to-1 ratio of in the money and out of the money strikes. And for everybody, consider reduced position size, legging into those covered calls, potentially with out of the money puts. Keep that position size and scale with what you are willing to own. We almost always say that through all market conditions, but unless you're just an outright bullish, hedge risk level 0, that becomes more important for sure. And put selling, also cautiously bullish. Consider the reduced position size, consider out of the money puts. You might also want to spread off those positions so that if we do get a pullback, you have defined risk and not just simply back to 0. And then, of course, aggressive traders can consider scaling into full positions. They might use more aggressive deltas, more aggressive put selling to be able to scale into a stock position even if they choose. In terms of sector specific, fairly green here. In fact, there's very little to be immediately concerned about on short or intermediate term sectors. Healthcare and retail, are somewhat laggards at the moment, but certainly a lot of healing has come into this look in the last 6 trading days. In terms of sector specific yesterday, you see healthcare actually had a good day yesterday, materials and energy as well. Energy has really been moving, and this in recent days has broken up through the 50-day moving average, and for energy that was a very, very long period being below the 50-day moving average, the longest period in quite some years is my understanding. So I think that's probably enough for today. As always, we greatly appreciate your liking us on YouTube and subscribing to us on the YouTube channel, retweeting us to the Twitter followers and the StockTwit followers, or wherever your platform is that you like to do with social media. That's in effect how you pay us, and that's with that feeling of appreciation that comes with that click of showing that you find value in what we are doing here, and we note every single one of those positive reinforcements. Email can be sent to support@falconglobaltraders.com. Also, keep reminding you there is this 40-hour course available, self-directed active money management in collaboration with the Chicago Northwest Burb Trading Club, 10-week course with some bonus material, 9th time that this has been taught by our friend Nick Fosco. And start date right now is to be determined. It will run on Saturdays from 9 to 1 weekly in the Chicago suburb of Schaumburg, and then simulcast to those who are not local to be able to participate from anywhere by using the simulcast. More details about the course description and all the other aspects and sign up and all that kind of stuff can be found at this website. From a Falcon Global standpoint, obviously we take all these principles we're talking about and put those into action with our own trading of our own portfolio, which is modeled in a live trade chat room. You can see more information about that at this website. Free trials are available. Come and take a look. Disclaimers, as always, hit the pause button if you need more time to review this. And we'll see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.